Alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. In today's video, we're just going to be jumping down the rabbit hole, doing a fundamental digest, playing some video clips for you all, and reading through some fundamentals, showing you all how massive this space, i.e. the cryptocurrency asset ecosystem and the DeFi ecosystem, are going to grow over the next consecutive couple of years. With that being said, if you all enjoy video breakdowns like this, do us a favor, smash that thumbs up button and subscribe. It does boost the YouTube algorithm and help push these video breakdowns out to more individuals like yourselves, and we do appreciate the love and the support. With that being said, let's share screen and let's jump in. We're actually going to start with a video clip where an individual representative goes on to talk about how financial institutions that do not adopt these technologies to certain degrees are going to be left behind, that this technological evolution, it is imminent. It's going to happen. Things are going to advance at a rapid pace, and it's just going to fall in line with this piece right here that I found on LinkedIn that the CYPRX researchers shared in the private CYPRX chat. And it talks about how institutional players are key to the tokenization market's growth. The strategic digitalization of assets driven by institutional adoption is beginning a fundamental transformation in how the financial world operates. Tokenization technologies and blockchain integration are dismantling traditional barriers, laying new foundations for how assets are managed, traded, and held. Financial institutions are at the forefront of this transformation. That is a good key sentence right there, because again, they have yet to adopt these technologies. They are going to adopt these technologies moving forward at a very rapid pace, and you do not want to get left behind. Moving beyond the testing phase, which I'm going to play a video clip for you all today, proving that they are testing these technologies and that financial institutions are interested. They're just waiting on clear regulation to actively roll out tokenization products as comprehensive strategies to navigate the complexities of digital assets. Now, right down here, it mentions, with large-scale institutions already rolling out these products, mid-size asset managers must pay attention. They're literally talking about how asset managers should be paying attention. So what do you think as retail investors you should be doing? The next wave of adoption is here, and those who hesitate risk being left behind as the market rapidly evolves. I cannot stress enough, stamp that statement, write it down, pay attention to detail, do research, buckle down, ladies and gentlemen, because now is the time to get involved, whether it's through education, through investing, through joining like-minded communities in this digital asset ecosystem. Now is not the time to be fearful and skeptical and think that this is all Ponzi scheme and that it's going to go away. The cat is out of the bag, and it is not getting put back in the bag. It is only going to continue to grow and expand at a rapid pace over the next consecutive couple of years. It says the momentum is building, and it is clear that to stay competitive, adapting to these new technologies is no longer optional. It is essential. Okay. And so this little tiny statement on LinkedIn that the CYPRX researchers found, shout out to the CYPRX researchers. I want to share a video clip of an individual representative. Let's go in and let's share this screen so you guys can actually hear this. And I want you to listen to what he says. And this correlates with exactly what this individual said on LinkedIn. This is from the Web3 Banking Landscape Summit from Crypto Valley that took place at the beginning of this year in March 2024, and you can see this video breakdown only has 131 views. Nobody's paying attention to this information. Yet again, CYPRX bringing you guys the realest info that not a lot of people are paying attention to, definitely not the mainstream. Let's just take a second and listen to what this representative talking on stage has to say.
Let's briefly speak about the innovation continuum. I really like this chart because this chart illustrates the way of any innovations in human history. So we can take, firstly, some simple example, like mobile phones, right? So initially it was impossible. Like 30, 40 years ago, it was totally impossible even to think that we will all have such powerful mobile devices in our pockets, right? After that, it became impractical. They were heavy, they were big, batteries were just very bad, coverage was very bad. But thanks to guys like Nokia, it became possible, right? After that, it became expected, and now it's 100% required. We can take another example from banking industry. We can speak about cards, of course, but maybe it's better to take an example from, let's say, contactless payments, like Apple Pay, right? Long story short, even like 10 years ago, it was impossible, but now it's required. So any retail-focused bank actually must have now contactless payments, right? And support Apple Pay and Google Pay and these kind of tools. So now, speaking about crypto, I believe that we are here. We are already at the expected phase, right? So customers of traditional banks already expecting to get digital assets, already expected to get an access to crypto, right? And I'm sure that tomorrow it will be absolutely required.
Okay, so I just want to pause right there to reiterate back to the post on LinkedIn, right? The post was talking about how if you do not adopt that, eventually you will get left behind, and that adapting to this new technological transformation is essential. You see right here, it says no longer optional, it is essential for these large institutional organizations to adapt. And what was the gentleman in the video talking about? How we are in the expected phase, and that we are soon going to move into the required phase, where right now it is expected of financial institutions to have digital asset options for their clients. In the near future, it will be required of these financial institutions. And we are, for a fact, moving into that type of ecosystem. Okay. Now, I want to play a couple of video clips from this particular video breakdown uploaded 2 months ago from SALT, Tokenization for All, Why the Future of Financial Markets is Digital. 3 video clips. We're going to play them talking about how the technology behind the scenes is being tested, then how the banks will come, but first they need regulatory clarity. And then last but not least, they mention talking about earning yield on your digital assets. And the reason why I want you all to pay attention to that particular part of this video breakdown is because of what I've mentioned in previous videos. Through the utilization of DeFi, you in the now, right now in this very moment, could be earning more digital assets to either compound your bull run bags, earn passive income, or do a multitude of different other things that DeFi allows you to do right now with the digital assets that you hold. The very digital assets that you've probably been holding for years, doing nothing but collecting dust in your cold storage. Take that mindset, alleviate from that mindset, and understand the power of DeFi. Head over to the CYPRX trading platform, the CYPRX website, join the Wealth 28 Club, and educate yourself, at least at a minimum, on how to utilize and benefit from DeFi, because we're seeing fundamental articles like this come out. I cannot stress enough, now is the time to get involved and to get educated. Even if you're not going to deploy, it's best now to get educated. Look at this report here from Python Network. Financial institutions are still currently hesitating to seize the $10 trillion. You see that number right there, DeFi opportunity. See what it says? I'm going to zoom in so you guys can see it. Blockchain by design can't natively connect to external systems. This disconnect, known as the Oracle problem, leaves DeFi applications without the critical market data they need to function. But where there's a challenge, there's also an opportunity. On that note, traditional financial institutions cannot afford right now to overlook. Blockchain oracles are a key to bridging this gap. And then down here it mentions, by tapping into the power of blockchain oracles, financial institutions can unlock new revenue streams and secure their place in the fast-growing DeFi ecosystem in the industry, which is poised to reach 10 trillion by 2030. That is only a mere small 6 years away from right now. That is not a long time, right? If you don't have a 5, 6, 10-year plan, I don't know what it is that you're doing or attempting to do to try and be successful. You should have one. And looking past, or at least towards 2030, is imperative for your success in this market, because that is a lot of when this technological transformation is really going to kick in a gear. I know that a lot of people hate hearing that, but it is the truth, right? If you go look at all the regulatory and developments and things that are happening behind the scenes, a lot of these jurisdictions globally, governments all around the world, have a 2030 agenda. Why do you think that is? Because a lot of this stuff is going to fully materialize and be 100% laid by 2030. All right. So I just wanted to touch on that, reiterating back to DeFi. I know that it says that financial institutions aren't necessarily here yet, but we know that they are interested, right? I've shown you guys video breakdowns like this before. Let's play this. An individual representative, the CEO from Wisdom Tree, going on to confirm that your digital assets should be working for you. We're going to play this video before we go back to the other video, just so you guys can hear why it's important that you are paying attention to DeFi. I just showed you guys that there lays a $10 trillion opportunity. The DeFi ecosystem right now is only in the, it's hovering at like maybe 90 some odd $1 billion in TVL locked. That is a massive growth curve between now and 2030. We're seeing financial institutions like individual reps from large organizations like Wisdom Tree mention DeFi and how your digital assets should be working for you. Take a second and listen.
This is a sustainable thing. Investing is, obviously, it's not a one-day thing. You have to, you talk about young people trying to get ahead. You want your money to work for you. Yeah. And if you are putting your money to work properly, it's just one of the great lessons in life. Otherwise, you have to work really, really hard if your money isn't working for you.
And everyone should have the opportunity to work hard, save, invest, create value for their families. I mean, that's why I think so many people have drawn to the United States, because of the opportunity to do just that. Our financial markets are the backbone of that opportunity. Let's switch gears into kind of where this is going. So we've talked about spot crypto ETFs. Let's talk about DeFi. This is an area where you guys, and you personally, have put a tremendous amount of thought. And you guys are really looking at it from the perspective of what you call responsible DeFi. What do you mean by that?
So when you think,
right, so they're talking about DeFi. They're going to go on to continue the conversation. I won't bore you guys to death and play the remainder part of this video breakdown. This is from the Blockchain Summit 2024, so it is updated info. But what I will show you guys is this fundamental piece right here, where they talk about the tokenization of real-world assets, and specifically commodities like gold. You can see right here, and what they particularly mention in this fundamental piece on LinkedIn is the expansion of DeFi. So far, the presence of precious metals products in the decentralized finance space, or DeFi, has been primarily limited to trading platforms like Uniswap. More broadly, an expansion into DeFi could stimulate renewed growth in the precious metals market, which has largely been stagnant since 2022. DeFi could enhance the utility of precious metals tokens and reinvigorate interest in the sector. That is massive. And would you look at this? This is the fundamental piece. Let's open this up right here, because who's at the bottom of this piece? Sorry, I don't know if you guys can see that. It says this report is sponsored by Wisdom Tree Digital Trust Company from July 2024. They're talking about DeFi. I just showed you all the CEO on stage telling you guys that your assets should be working for you. And then they go in to talk about mature DeFi approach, right? So, I'm just trying to bring to everybody's attention what the mainstream media is not going to show you. Speaking of what the mainstream media is not going to show you, let's just take a step back and let's understand why we're still stuck at around $2.1 trillion, why we have not seen trillions upon trillions of dollars flood in yet, but keep a forward-looking perspective, because that is yet to come. That is going to happen, in my personal opinion, 110%, but we need to wait for sound regulatory clarity. Well, technically speaking, not us as retail investors, but the financial institutions, they have to wait for regulatory clarity. So let's just take a second and let's listen to what these representatives have to say from the SALT conference that took place just a couple of months ago this year in 2024. All right, so the first one, we're going to prove to you guys that they announced this on stage at roughly about 10 minutes and 50 seconds. They go on to talk about how, they built an environment where these financial institutions, these organizations can test this, this new infrastructure behind the scenes. Take a second and listen.
These things they bring liquidity to markets, and they allow its financial inclusion. They allow household participation in these markets.
Blockchains create markets for everything, and Parcel is a great example of that, built on the Solana blockchain.
And so Parcel, it's an interesting project. I'm the co-founder and CEO. Parcel is a novel marketplace where you can get long and short the price movements of real estate with up to 50 times leverage using a perpetual futures architecture. Perps are really big in blockchain. And so, for example, that's why we can test these types of architectures before they're ready for institutional grade adoption. So speed and flexibility have helped.
So you heard that, right? They can test this infrastructure before institutional grade adoption. I don't know. I know I've seen so many skeptical people on the internet say, oh, they can't test it without moving price action. Yes, they can. They built it that way on purpose. Financial institutions are not 110% fully here yet. They know they're in the educational process. They're well aware. They have blockchain and digital asset teams working in the banking system right now. They're building out the infrastructure. They are just waiting for regulation. Let's confirm that. Let's go to about 16 minutes and 15 seconds in this particular call. And they go on to talk about this. Let's take a second and listen.
Going to change everything. It's going to be perfect. What about if it doesn't work, right? What about interoperability issues? What about the friction in the system that is definitely, from what you all just said, going to remove all the friction in the system? So like, what's the bear case there for interoperability issues?
So I think the biggest unaddressed issue here is the fact that tokenization cannot just be a means for regulatory arbitrage. You can't just take a stock and put it on a blockchain and say that it doesn't need to, for example, be cleared by DTCC or, respect regulation NMS in the US. It has to actually go through the correct regulatory channels. And I think, one, until there's enough proper rules and regulatory clarity in place for that to happen, they're not going to end up on a bank's balance sheet. But also, when we talk about tokenization, typically we are usually referring to the primary issuance. Example might be someone who issues a tokenized treasury. You go to them, you give them dollars, they issue you directly into your wallet some sort of tokenized treasury. That is not the way that most people pick up some kind of securitized asset. Usually they're doing that through a secondary layer, a distribution layer, like a broker-dealer. Our company Architect is getting a broker-dealer for almost exactly this reason. People are going to wait for there to be the full kind of waterfall regulatory structure in place before they can get access to a lot of this stuff. And it might seem paradoxical, or it might seem like a kind of hypocritical to say, okay, well, we have this sort of distributed ledger. It's supposed to be sort of DeFi, and that all of a sudden now we need like traditional financial structures like a broker-dealer in place. But ultimately, the world is what we live in. And in order for large banks, institutions, pension funds, insurance funds, hedge funds, et cetera, to get access to these assets, there has to be that regulatory structure in place, a distribution layer. Until that's there, I don't see, real world assets and tokenized assets growing to what it possibly could be.
Boom, right? So yes, we're talking about trillions of dollars of money coming into the space, but I want you guys to understand that here at CYPRX, we maintain a realistic perspective. We're talking about $10 trillion, but understand that it is a future projection for as long as institutions are remaining on the sidelines due to lack of regulatory clarity. That landscape is all in the process of changing over the next consecutive couple of months/years. And you do not want to get in after the financial institutions. That is not, I cannot stress that enough. I could not imagine buying these digital assets 5 years from now, 10 years from now, when banks have flooded in with trillions of dollars. Could you imagine that? I don't know. Ask yourself that question. Some people sleep in that, I guess, soundly with that in mind. Moving on. All right. Anyways, last but not least, I want to play this last video clip. If you guys have enjoyed this video breakdown so far, always keeping it real with you guys, bringing you fundamentals that the mainstream's never going to bring you. Smash that thumbs up button and subscribe. We do appreciate the love and the support. If anybody's interested in learning more in detail about DeFi, we'd love to have you on the team. Check out CYPRXtrading.com. Over 75 A to Z video breakdowns on how to get involved in DeFi, teaching you about DeFi, how to deploy your digital assets, how to start earning passive income. It is, I'm telling you guys right now, going to be the new wave that everybody in crypto eventually is going to be on. If not, you're not going to keep up pace with people that are. With that being said, let me show you guys that these financial institutions and these people on stage, they're talking about yield and they're talking about earning on your digital assets. Let's go to 24 minutes and roughly about 30 seconds and just listen to a little bit about what they have to say. I won't play the full clip because we're almost at about 20 minutes for this call so far.
So today, if you want to take money that you earn through your income from your employer, that money goes into a bank, right? And that takes time, and you usually receive it only twice a month. And then if you want to take that money and invest it in the stock market, you've got to, connect your account through Plaid or whatever interface they have, and then move that money, which, ACHs and takes a day or two. And then you can trade it. Maybe there's even another day before you can trade it. So you're talking about, money coming in 2 days a month, taking 1 to 3 days for you to take that money and then be able to invest it in the market. That's lost economic value, right? Those few days. Imagine if your income is streamed to you daily. Imagine that you can borrow against future income. Imagine that the second that you have money, you can go buy something with it. And the second you sell it, you can go buy something else. That your money is earning yield that entire time. And then, as Stacy said, imagine taking assets that are yield generating and being able to use those as payment and settlement for goods and services. We call this PayFi, and we really think this is the...
So anyways, he says that they really think that this is the future, but they're talking about using assets that are generating yield, digital assets that are generating yield. Imagine if you got paid, and the moment that you got paid every single day from your job, right? The money that you made, you went and you put that money into a yield-bearing platform in the DeFi ecosystem, started earning yield, and you could trade with that money right away. It's going to unlock so much economic value that I honestly don't think that people can even fathom right now how much money is about to come on chain over the next consecutive couple of years once the regulatory clarity in the landscape is solidified. That's why I keep preaching to you guys to get educated about DeFi. Even if you don't go and deploy on DeFi protocols and networks and whatnot, still it is, and it would behoove you to learn about it. Many blessings to you guys. As always, bringing you all the realest information. Like I mentioned, do us a favor, smash that thumbs up button and subscribe. We do appreciate the love and the support. And with all of that information in mind, remember, none of this is financial advice. Always assess your own risk properly and understand at the end of the day, this is all very risky. And, I don't want to see anybody get burned. So always do your own research. Always assess your risk properly. And with that in mind, I will see you guys in the next video breakdown.